I'm sitting here with Karen Henderson with the Taylor Agency. She has been writing insurance for a long time in the Low Country, and I asked her to talk about flood insurance, which is people need to know about when they buy property in the Low Country. I guess the first question I want to ask you, Karen, is every property in the Low Country in a flood zone?
Yes, all homes in the Low Country are in a flood zone. It may be a more moderate zone, like an X flood zone, or a special flood hazard area, which is an AE zone or VE zone.
So a lot of times you'll hear people say, well, that property is not in a flood zone. I think what they're really referring to is that it's not in a flood zone that a lender requires flood insurance,
That's
right?
That's right. So X flood zones are preferred flood zones. They have a lower risk of flooding, a 0.2% annual chance of flood risk, as opposed to AE zones and VE zones that have a 1% annual chance of flood risk. And those locations are subject to the mandatory lender required flood policies.
So when it says 1,000-year flood or a 500-year flood, doesn't mean it's going to happen every 1,000 years, does it?
No, it's an annual percent chance. So homes in AE zones and VE zones are both subject to a 1% annual chance of flood.
Okay. So I know FEMA came up with a new rating system or flood insurance system called, I think, Flood Point 2.0?
Risk Rating 2.0.
Risk Rating Point, okay.
Yeah.
Tell me a little bit about that.
So really what they determined is the legacy system they had been using for rating flood insurance was outdated and it wasn't giving accurate rates for the risk. So they are using more modern technology now with Risk Rating 2.0 to determine flood rates for every property location, and no longer using flood zones specifically to establish a base rate for the flood policy.
So what would affect that? Would it be close to a marsh? Would it be close to maybe a retention pond? Or if you're further inland, how would that affect the rates?
So that is one of the ratings factors, but there's a plethora. So in the past where we used elevation certificates and flood maps, really those two items were the only factors used for the rating process. Now we are using, in Risk Rating 2.0, more GIS technology, geospatial information data, similar to Google Earth, so they can look at distance to flood sources and the type of flood source, whether it's ocean waters, rivers, retention ponds. More inland, if you live near a dam. Because the dams break. And so what we've seen for some of the more traumatic flooding events in our area were when the dams broke in Colombia after some of the hurricanes pushed so much water inland.
Right.
So they're using that distance to water with GIS technology to help establish rates.
Because it's like a downflow. We're not used to it in the Low Country.
Right.
But rivers
they flow inland.
They flow, right.
And then they overflow, they exceed their capacity, their banks, and lead to pretty significant flood losses. So inland properties are at risk too. So they're using that distance to water source along with a lot of other data to determine flood rates. Some of it is public record data.
Mm-hmm.
So they know how much home costs when someone purchased it, they know what the purchase price was, and they're using that to determine the replacement cost of a building. Replacement cost historically was only used on rating VE flood homes, and now it is used on all properties. So you could be in an X flood zone, a preferred flood zone with a really high value home, and your rates will be a lot higher because of the replacement cost of your home.
And then there's a cap for insurance, for at least for the federally insured insurance. It's $250,000, is that correct?
That's correct.
And that is content and building?
Building is capped at $250,000, and contents is capped at $100,000 of coverage. So although when they're using replacement cost as a ratings factor, although everybody is maxed out at $250,000, it's much more likely that a higher value home with a small flood loss would hit the cap as opposed to a more moderate home.
So what are you seeing with lenders? Let's just say it's $1.5 million insurable home and the flood insurance only goes to $250,000. Are they asking for more than that amount of flood insurance? Have you seen that?
99% of the time they do not ask for anything more than what you can purchase through the National Flood Insurance Program. Very rarely, and I've been doing this for over 10 years, have we had a lender require excess flood coverage. But it can happen.
It can. Obviously, the lenders, they have the money, they make the rules, right?
And we certainly recommend it too, because it is a gap in coverage, especially if you have a higher value home. So we can quote excess flood coverage to supplement the NFIP flood premium policy limits.
So I think you've kind of maybe explained how to determine what's causing the damage. So if you have a hurricane, so you have water coming down, you have water coming up. Who
How do they
decides?
figure that out?
Yes.
So in a flood type scenario, you likely will have some flooding damage and some wind and hail damage in conjunction. So the adjusters will use a water line to determine how much of the damage is due to flood loss as opposed to the wind and hail damage. And you will not be able to finalize your homeowner's claim until you have settled your flood claim.
So flood first,
Flood
then
first.
homeowners.
Yeah.
Okay, great. Do you need elevation certificates now to determine?
We do not need them, but I do still recommend them. With Risk Rating 2.0, FEMA and the NFIP, the National Flood Insurance Program, is able to determine first floor height. It may or may not be accurate, and the elevation certificate data will be accurate. So if the elevation certificate data shows that the first floor height is higher than what FEMA is estimating, your premiums will be lower. So I like to input the elevation certificate data. It will give you the better of the two options.
So if you're going to buy a home, what information should you ask the seller for to help for you to determine flood insurance and maybe even homeowners insurance?
Absolutely. So for flood insurance, I would love the elevation certificate when there is one available. We can do it without it, but if there is one available, that could be helpful, as well as a copy of the seller's existing flood insurance policy if they have one. And the reason we want to have this now is that we are able to link to it. We have to have a hard copy to do this, and we will essentially be able to put a new owner into the glide path program so that their flood insurance premium will more slowly, more gradually increase to their full risk rates. With Risk Rating 2.0, we're seeing here coastally rates are most often going in an upwards trend, but glide path allows us to limit annual premium increases to 18%. So linking to a flood policy will carry over any credits that the seller has onto the new policy.
Okay, good.
Yeah.
So we got to get a copy of the flood policy, but you're saying actual the copy? I mean,
Hard copy of the flood insurance active policy declarations page.
Right.
Yeah.
If they have an elevation certificate.
And if they have an elevation certificate.
Okay, good to know.
Yep.
So here's my question, or a question I get asked a lot, is if a property is in a X zone, which obviously is the lower risk of flooding, still can flood, should you get it?
Absolutely. We always make the recommendation. You're in a more moderate flood zone, but that does not remove your risk of flooding. And the National Flood Insurance Program reports 20% of their claims are for homes in moderate flood zones. So we would certainly recommend it. Premiums typically can be really reasonable in these more moderate zones, and we would recommend it.
Okay.
Yeah, for homeowners and renters.
And renters.
Yeah.
So that's a good point, because obviously if you're renting a house or renting in a condo and it floods, you don't have insurance, you don't get covered.
That's right.
Well, Karen, thank you so much for
My
your
pleasure.
information about flood insurance, and I look forward to working with you soon.
Sounds
Okay?
great. Thank you, David.
Thank you. Bye-bye.